Hello and welcome to today's webinar, where today, of course, we're talking about requirements. We're talking about the need for focus, the need for targeting our site finding and being as laser focused as we can, of course. So today, I'm delighted to say that I've invited Dan Taylor here to come and speak to us to help us with this particular problem. Hi, Dan, are you there?
Yes, hi there, Paul. Can you hear me?
Hey there. How are you doing? So for those of you that don't know Dan is, of course, an investor developer in his own right. He's the co-founder of a thing called Taylor Capital. We'll learn a bit more about that later on. Which I suppose in many ways is a sort of a mentorship and provide some training and some support and help people be kind of, I suppose, passive in their investments in many ways. So I suppose, Dan, just perhaps so people to kind of get to know you a little bit before we kick off. I suppose you've been busy investing and developing and this sort of stuff. Why set up Taylor Capital? What was kind of the reason for that?
Well, we set up first because the big demand in the market from people we knew to help them do deals. What is deal sculpting? How do you use tech strategies? How do you bring it all together in strategy stacking to make a better deal, make more profit, to de-risk projects? Principally, that's our number one motivation, de-risking. And then it kind of morphed into that. A lot of people did their own deals and we're still helping people today, but it's kind of morphed into a lot of our club members or business owners, professionals, kind of with no time. But they still need to grow their capital. So they kind of asked us, is there any way we can get involved with you, your deals that you're doing, Dan, and kind of share the love, as it will. And while they kind of get, fixed returns on their capital to grow their capital, we also take through the journey of the deal. The full journey, that could be a 6-month deal, could be an 18-month deal, 24-month deal. And they get regular insights on what's happening in that transaction, that deal. So they get that front row seat of kind of an earn and learn experience, because this is not classroom, this is real life. This is where the kind of rubber hits the road. And as a result of that, the wheels fall off the car quite a lot, and you have to be able to put them back on. And you have to love those challenges, and I kind of lean into challenges, love them, because I see whenever a challenge comes, I just see it as a kind of gift to potentially offer a better solution for all involved.
Sure. Right. Well, let's I suppose the key thing today to try and understand is what the point is of defining a requirement, how we might do that. I guess it'd be helpful to get an understanding of how you guys have defined yours and kind of what you're up to, and then kind of how we can find some of those, whether we're looking on market, off market, and that sort of stuff. And so maybe I'll get you to run through some of that for us, if you could.
Yes, absolutely. What I'll do is I'll share the screen and we'll go through some slides, and then we'll culminate. We'll tell you, why we think it's really important, and then we'll show you what we do, and then we'll maybe show you as a result of that the kind of deals that we're looking for, and then we'll also tell you as well. One of our club members, we're completing a deal on Friday. Fingers crossed, touch wood. As a result of that deal completing, a club member will receive £75,000 as a deal sourcing fee, which is quite substantial, I think. So let me just go through these kind of slides, and we shall hopefully you can see that, Paul.
So yeah,
cool. So this is us, Taylor Capital. We've kind of evolved into we do the deals so you don't have to. So we're looking forward to tie up with business owners, professionals with no time who really need to grow their capital, because nothing worse than if you're in retirement at some point in your life and you run out of capital. So why is it such, right now we're sitting on a massive opportunity. You might not have the time to take advantage of that. And that's why we've created Taylor Capital. But there is so much opportunity in the marketplace, and it's because of this, the greatest wealth transfer. And this is McKinsey's that said this. McKinsey is one of the global consultant firms, and they believe there's going to be a 27 trillion of wealth to transfer from the baby boomers to the next 2 generations, which is quite incredible, to be honest. And that's it's creating obviously issues, creating problems, and we're also in other problems. There's been macro. We're kind of in a culmination of tsunami of macroeconomic and demographic issues right now that's going to create a massive, in my view, opportunity. And number one is the recession. And obviously that's no news, but did you know it's been the biggest recession since 1706 last year, which is quite incredible. I couldn't believe the stats either. issued by the Bank of England. And, despite that, we've had massive money printing, which has caused this, recession plus also asset price inflation, which is quite an interesting, place to be kind of thing. And we're obviously all aware of the retail revolution or evolution that's happening at the high streets, which is causing mayhem in the high street. And there's kind of like we're completing on one on Friday where it's owned by a big fund, but the big fund's not really set up to repurpose and reprofile kind of redundant retail. But we kind of are. We lean into those kind of opportunities. And that's what we see it as an opportunity, because we can buy wholesale, take a big problem off somebody, and then repurpose that and hopefully make a handsome profit at the back end. So that's causing, these kind of things are causing major, major problems. And the baby boomer as well, the wealthiest part of the generation, seemingly according to that McKinsey's report, they own 67% of the Western world's wealth, which is quite incredible. And for 4 decades or so, they've been buying asset acquirers. And in 2016, the first of them turned 70. 2025, half of the whole baby boomer generation will be 70. So they're going into the asset selling mode. So if you imagine the recession put a down pressure on values, the retail revolution that's happening in the high street has put a massive down pressure on values, and the baby boomers selling lots of asset into the marketplace also has put a massive down pressure on values as well. Not every asset, but the kind of assets that we go for assets in turmoil. The asset isn't distressed, it's just the owners are distressed in a certain way. They just want to escape. They have a problem, and we love providing solutions to problems. The bigger the problem, the bigger the prize, I suppose. Coupled with this, we also have something else, which is a massive shortage in housing. And coupled with that, we have this accelerant that's just been put on the fire by the government. In fact, the biggest relaxation in planning since World War II, called PDPA, and PDMA. It's just an incredible time to be. That's not the only planning we use. We kind of really love full planning as well, to be honest. We've got a whole value add stack of how we add value to deals, and it's a stack. It's not just one item. But let's look into why niche down. And for us, really, we've got to go number one where the air is thin, and we'll tell you our very specific criteria that we look for. There's kind of 2 segments of where we're niching into, and we kind of try and like to go where the air is thin. Now, why go where the air is thin? Because right now, there's massive opportunity. So there's actually too much opportunity. Trying to narrow it down into what you love and what you're great at and how you can surround yourself with the right people to deliver these projects is really, really important, or you're just going to get bombarded with opportunities and you won't know where to go. So you have to niche down and find out really what are you after. And that for us is really, really critical, because as soon as you do that, there's kind of there's less confusion. You're speaking to agents, you're speaking to club members, you're speaking to big funds. As soon as you simplify things down into one thing, then they know exactly what you want, and they will not bombard you with other things, which is really, really kind of important. And where the air is thin is less competition as well. Like for us, we're looking for a GDV, that's a gross development value of minimum £10 million, and very other specific criteria that we'll get into in a couple of slides' time. So really, really important for us as Aris, then we target big problems, vendors with big problems. Like I'll give you, for example, one more, fingers crossed, touch wood, completing on Friday. This was a huge, owned by a fund and a massive cash flow, had about 625K net income coming in. But after the black swan of COVID, the upper 3 floors went completely vacant. So that 615 went down to 410, which is the income generated by the 2 commercial tenants, but it doesn't stop there in commercial. And why have they got a big problem? Because their 410 goes to about 300K-ish in the region because of the negative cost contribution from the upper floors. It's not just they're not getting the income, they've got potential negative rates, negative service charge, negative insurance. There's a lot of things that compound to create real big problems real quick. But for us, that's kind of playing into our hands. So we like to go with the areas then, less competition, and that's that kind of, minimum 15,000 square foot, minimum 3 floors, minimum £10 million GDV, because less is more, and you really got to think, you just can't do it all yourself. It's impossible to do it all yourself. So you therefore have to lean into leveraging and outsourcing other people. So when you're bringing in other people, the key criteria is to simplify so that they understand exactly, really, really quickly, kind of what you're after. We're going to show you a picture exactly what we're after. So for me, it's outsourcing and leveraging is all about, the one big thing. If you've read a book by, who was it by? Gary Keller, actually. And it's like a surprisingly simple truth behind extraordinary results by really getting down to your one big thing. What is it for you, kind of thing? And then sharing that vision with other people so they can bring you deals. And for me, it's niching is all about, getting who, not how. So how is how to do things, and you can't do everything. So there's another book by Dan Sullivan and Benjamin Hardy, and it's all about, replacing a what with a who. So what does that mean? It's really getting back to that thing about outsourcing and leveraging. So the more clear, the more concise, the more simple your message is as in terms of what you want to bring, then you can get a who for that what kind of thing. And that for me is really, really critical. Go with the errors, then think about the one big thing. What is it that you're after? And then find a who to get that what kind of thing. For me, that's where it starts and stops. And it, less is more. This is not about doing everything, doing all the work yourself. It's about the Pareto principle, the 80-20 approach. 80% of the profits are done by 20% of the work. And that's what we kind of embrace here. And where do we find these things? Well, obviously for us, there's three key areas: this relationship tools and the club. And our relationships are, a lot with either a handful of agents, large funds, that through the COVID Black Swan have then decided, okay, we've got all these assets that were kicking off a lot of cash, but because of the COVID, a lot of them are now reduced in cash. And in fact, some of them have gone down to half net income. So let's put those ones into the non-core bucket and dispose of those. And we're speaking to a lot of funds just now about those assets and plus agents. And that is a very one-on-one kind of approach, which I always love. And I always advise people to kind of do that. Now, in terms of tools, obviously we use Nimbus, and Paul's going to show you in a second how you can find, kind of deals that match a very specific requirement in a minute. And in our club, and as we told you before, we actually pay our club members. So why not keep it in the family and share the love with our club members? We have a private members club, and we help them grow their capital. Number one, by getting involved in these projects and an earn and learn approach, remember we said a front row seat to actually real life, what actually happens in these deals on a month-to-month basis. We have a call every 2 weeks, but we also empower our club members to go out and search and bring deals to the table that match our requirements. And if they get the right deal and if we complete, then they'll get somewhere between £5,000 and £50,000, depending on what kind of deal it is. Now, we'll show you a deal very soon that one of our club members will get a check for, well, not a check, but a bank transfer for £75,000, which is quite nice. Thank you very much. And one of the benefits of the club, I suppose. But that's where we find our deals. And that's about the only place we find our deals. Yes, there's websites and whatever, but we try and leverage these kind of tools to find deals both on and off market. And we love both on and off market, and for different reasons. In terms of off market, if you're dealing with something off market where the air is very thin there, we're dealing a fund right now, and they're talking about a number of sites, and we're one-to-one. They're not on the market. They haven't even approached an agent. So that's a great opportunity. Why is that a great opportunity? Because in a nutshell, you have time. So one of our strategy, adding value, one of our strategies is a delayed completion. And we love delayed completion. Why do we love delayed completion? Because you have time to add significant value to the transaction before you actually buy it, which is really, really important for everybody in our space kind of thing. So we love those kind of things, and whether it's an option or an exchange or conditional exchange, or unconditional exchange, we use all these kind of things. But the key thing is for us, and when it's unconditional, we usually put a deposit down, and it's all based on base case, a worst case situation, not based on full planning. But at least we have the time to try and get full planning and the PD, to really add value there. And it's not just the the PD and full planning. We always look at the tenants on hand and see where, if the short term, medium term leases in there, we always look for them to try and re-gear, extend, do some asset management on the ground floor as well. So we love hybrid schemes and we love off market. It's one of our places, and that we really rely on, to be honest. On market, off market as well, obviously, is predicated by, for us, direct mail, phone calls, and you must have a CRM system. Why must you have a CRM system? Because you need a CRM system to remind you when you need to chat with that person again. So if you've done a letter, you've had a response, or you've not had a response, then you put it into your CRM for 6-8 weeks down the road. I'm sure, I think obviously Nimbus Maps does that kind of thing, and hopefully what you want is a CRM that you can have that kind of dashboard, if you like, but also has the ability to email you to remind you that you've got a deal coming up, you've got a chase coming up, whether that be a phone call or whether that be another letter or whatever. So for us, off market is gold. It's produced some phenomenal results for us, but it's still at the same time we like on market stuff as well. And on market stuff for us is, for us it's very much you're either first or last to the party. And if you're first, you get the gold dust. If you're in the middle, you're negotiating with everybody. But if you're then, everybody's been at the party, at the table, and they've kicked the legs and perhaps changed the expectations of the vendor, then they've done you a great job if you're the last man standing. And for me, being the last man standing has always produced incredible results. One time we had a deal that was on the market for over 2 years, and we got there at the right time and managed to get a fantastic deal at a third of the price it was on the market for. Which is pretty incredible. Now that has been last man standing. That is all about follow-up. If you leave here one thing, the gold is in the follow-up. It's all about follow-up. This is a marketing exercise when you're doing deals or sourcing deals, whether it be off market, on market. It's a sales and marketing job. You're marketing to get them to the table, and then a sales job, which is all about follow-up sales. Yeah, because 90% of your customers are not ready to buy until 90 days from now. So do you have a system in place to make sure that your system follows that lead for a year? Now, what I mean by a lead is we're talking about deals here. So it's a property, a transaction. Yeah, so you have to have that system in place to enable you to still be there when the expectations are reduced, and you can move in and hopefully get a kind of win-win transaction. So we love direct mail. As I said, we love CRMs, we love follow-up systems. But one of the key things that's worked incredibly over the years is something called Lumpy Mail. Now, what is Lumpy Mail? Lumpy Mail is when you put something in your mail, in your envelope, that is unusual. It could be a banana. It could be a tea bag. It could be a Kit Kat. It could be something a little bit more substantial, like a box of Ferrero Rocher. It's all to do one thing, though. Grab their attention, to stop them doing what they're doing, stop that scroll, stop that whatever, and focus on what you have to say. And you don't have long, you probably got a minute. So we send quite a lot of Lumpy Mail. We started in 1996 and have never stopped, and we absolutely love the approach. And it's different. Obviously, your message has to be to market, and every message is different. Like one of our friends, actually, next door neighbor, he's got a chain of jewelry shops, and my goodness, the best Lumpy Mail I've ever seen in my life. Now his high-end customers could spend, let's just say, a lot of money a year. And so what he does, he's got to make the message to the market. So what he did, he went to a distillers that's obviously that sells beautiful whiskey, casks. Their normal sale is a cask of whiskey, which is tens of thousands of pounds. And he asked for a kind of bespoke, maybe 6 different whiskies in a beautiful case, delivered to their best customers. And it was a sampling. And then he put on a live, this is through the lockdown, put on a live kind of Zoom meeting. The distiller was there on hand to take everybody through the whiskey, the historic nature of each whiskey, and the taste and the flavor and the smell. And one by one, they're going through these 6 whiskeys. Now this cost £300 per item, but the sales from that were incredible. But more than the sales, you're on a Zoom, an hour and a half with your best customers, creating that relationship, deepening that relationship. So that for me is, when I hear stories like that, I always ask myself one thing: how does that apply to me, and how can I take action? And you perhaps should be thinking the same thing. How can I create a deeper relationship with my customers, add massive value. And how does that apply to me, and how do I take action? I thought the story was great. I absolutely loved it. And he sent me one as well, which I'm not one of his best customers. But he's a great mate, and he sent one to me, and we tested it one night. So it's fantastic. And one of the reasons I bring that story up is because we're trying to emulate that. How does that apply to me? How do I take action with one of our best customers, which is a big fund? And we're trying to do the similar kind of thing there. I can't tell you too much about that, but you should just be thinking the same thing. Who is your best customers? Who is the one that's going to make you most profit over the next 5 years? How would you like them to treat you and reciprocate? How does it apply to me? How do I take action? So for us then, what does that look like for us? What does great look like for us? Let's have a quick look at that. Well, here's the one here that we, fingers crossed, touch wood and all that kind of stuff, we complete on Friday. There's been a myriad of things happening here in this deal. And in fact, I've got to fly home tomorrow. I'm not supposed to be coming home tomorrow. I'm in Spain, Marbella, and we're not supposed to be home, but we're having to come home to make sure this one gets over the line. As despite being post-COVID digital world, there's some finance houses that just want a wet signature witnessed by the solicitor because there's been that much fraud going on, which I could not believe. With the same funder, we did a deal in July, it's significantly more complicated, but they're insisting on this. So we're having to come home tomorrow morning and just to make sure this gets over the line. But a club member here is going to receive 75k for sourcing this deal. They never did the analysis, the feasibility, or any of that. We do all that. Never did any of the delivery. We do that. And our club members, our private club member, as Untitled Capital, are really here for other people to get involved in these kind of projects. While you grow the capital, yes, fantastic, but you also get a front row seat of how you do these deals. What is a TOGC? How does that work? How come we saved £1 million on the VAT aspect basically 2 days ago by novating the contract to something else? How does that work? How do we save 50,000 SDLT on top of the VAT by novating the contract? And how do you novate a contract? What is group relief? All these kind of things we teach people on a front row seat month by month. And our club members can receive this, get 5 to 50k per deal. If we complete the deal, we've got to like it. We do all the flow work, all the running, and we obviously we have a team around us, professional team. There's about 16 of us that we use to drive these deals over the line and add value before we buy. So here's our kind of rough KPIs. We look for 15,000 square foot minimum. We're looking for £10 million GDV minimum, 3 floors minimum. We're looking for existing tenancies, so commercial tenants. We're talking about the commercial tenants on the ground floor, which is quite unique. There are hardly any developers that love or lean into or embrace existing commercial tenancies. We love them. We love short-term, medium-term leases, so that we can do some asset management. What is asset management? Basically, hopefully, at some point we can. Now, this sounds contrary. Reduce the rent and extend the lease, which increases value. So say that again, reduce the rent, extend the lease, which increases value. That's how commercial, well, that's not how commercial is valued, but that's what you can do in commercial. You can actually increase the value of a property just by reducing the rent and increasing the term of the lease. Very much dependent though, massively caveated by who is the tenant, how strong are they, what's the covenant of that tenant. And all the covenant is a guarantee to reduce rent over a period of time. Are they good for their money, kind of thing? So we love those kind of tenancies. We like a very particular type of tenants. I call them essential daily spend. I.e., what do you need to spend money on every month, no matter what happens? It's cat, hedged against the big cat attack. Cat being correction, Amazon, and technology. We look for those kind of tenants. We love C-stores. We love hot food deliveries. One of the tenants in this property were on Friday is Poundland, which is great. Essential daily spend, a very, very low value ticket item, but high spend per visit. And CEX is next door, which is a bit of a gadget shop, which is great because you can, in a time of recession, what do you want? You want cash. You want to get rid of your junk, or your toys, your tech, and replace it for cash. And that's where you do that, which is fantastic. We like the upper floors vacant, or as close to vacant as possible, or an easy route to become vacant, so we can convert them into hopefully residential use. We like transport links, 10 minutes walk to the train station, hopefully under an hour to London, central London, and residential pound per square foot rates of over £400 a foot on exit. The one on Friday is, when we first analysed it, I mean, here's the real reflection of inflation right now. When we first analysed this deal, it's £510 a foot exit values for residential. That's now £565 a foot. And seemingly we asked the Rick's valuer, by the time we're selling these, where does he think it will be? And he thinks it'll be another 13-14%, which is quite absolutely, that's quite incredible. It's a big jump. Now, conversely, while we've got that big asset price inflation, we don't book that into the figures, into the analysis, because they've already been done at 510. But we book in all the time. Every month we get an update from a QS, quantity surveyor, and he's really given us great insights into asset price inflation. Like, for example, steel. From January to now, steel has gone up 89%. Now that is outstandingly incredible. I still can't get my head around that. So that's what we have, asset price inflation everywhere. We've got last year we had the biggest recession for 200 years. Why? Because all this printing money and the free money that's obviously propping up the economy. But no point worrying about things you have no control over. What do you have control over? Worry about them and fix them all down. So these are our KPIs. This is what we are looking for. And there's two types of assets we're looking for. So here's the first one, shops and uppers, or parades of shops and uppers. This one's in Guildford in Surrey. This one's in Alton in Hampshire. And either of these two kind of fit the bill. They're both at least 3 stories. This one's 3 stories. And this is very much a wholesale to retail. Now, what do I mean by that? I mean, you're buying it wholesale at a discounted price, and you're splitting the component parts up, or what I call slicing and dicing, and then selling the parts off and retaining some. We're looking for these kind of properties. Now, you notice here, it's got an anchor, Co-op, who are fantastic. Not a long-term lease on this one, but still fantastic. And we usually have discussions behind the scenes to see how that's trading, before we jump into these kind of things. We never bought this. One of our club members bought this, and we helped him through this. He was very experienced in residential, but no experience in commercial. And one of the units was a hot food as well. Not this one, is a hairdresser's. It's the one to the right-hand side of this. And lo and behold, we've got a 25% premium on market rents for the hot food consent, and we've got a key money for them to come in, which is pretty cool. And then he sold off these 3 shops. Here, there's 5 shops, 2 by the Co-op, 3 others here, and then there's 5 duplexes upstairs. So we're looking for these kind of things. These are our shops and uppers that we're very much in the hunt for, and kind of right up our street. There's also one other asset type that we're looking for as well, and that other asset type is a little bit more unusual. So this is shops and uppers, or parades of shops and uppers. And then, in fact, the one on the right here, see the one that says Norwich House? That's what that's going to look like. So hopefully another 2 floors on top. We've got PD, we've got the PAN notification through for the 3rd floor. And the first 2 floors, change of use is coming through. That we're in the depths of the Section 106 right now. And then hopefully we hear mid-November on the top 2 floors as well. So this is, the top 2 floors. Never underestimate the power of full planning. PD is great, MA is great, but full planning is obviously awesome, because you're paying nothing for the air up there. You're getting it at £0 per square foot. Yes, it costs you more to build, but if we can pull this off, this is going to add so much value to this one. So this is what it's going to look like. That's what it looked like there right now. That's what it looks like today. And this is what's going to look like. So really, this is creating a lot of impact in the community, in the environment, in the landscape, and also in our private club members, hopefully in their capital, growing their capital as well at the same time. Here's another one, more unusual. This is, I call it the ABC strategy, the acquisitions of businesses that own their underlying commercial property. Now, you can see here, this is ugly. And I kind of like them ugly. I like them chunky and I like them ugly. And this one here certainly fits that description. And this one here was on, remember we talked about off market, on market. Well, this was on the market over 2 years, offers over 340. And we managed to, buy this for 150, which is, well, 120 net actually. So 120K, we got 24K coming in rent as a short-term play. And this was a combination of kind of business buying strategies and commercial property strategies. We did lease options, and then we assisted a management buyout on the business inside while we worked on the longer term play. Because the longer term play, and I'll come back to this one in a second. So the longer term play of this one, because of the location, is going to look like this. It's going to be 122 student studios because it's right next door. This is the Students' Union here. So you can kind of roll out of bed and head up in the bar, and not too many steps, which is quite nice. But right over the road, interestingly, is the University of West of Scotland, which is quite a big one. And they've got a massive demand for high quality accommodation from abroad, from China, and also from postgrad. So that's why we're doing studios. We're doing we're kind of almost like providing a boutique student hotel kind of accommodation with fantastic communal areas that have, collective workspaces, individual workspaces, soundproof video booths, a gym box, a laundry box, and all these kind of things. So it's going to be really cool. I'm really excited about that. And the Renfrewshire head of regeneration has really been incredibly helpful, which is another part of our strategy, is to bring all stakeholders on board and get buy-in and get help with the design from them, so they take ownership. And that takes some time, to be honest, but that's what we're doing. So imagine this ugly thing here, turns into this. This is really repurposing redundant retail into a better use to last, for the next generation, really creating some lasting impact. And this one here was again a business that owned its underlying commercial property, and it was a tempting bowling alley that we turned into a kind of parade of blue chip investments. We've got JD Witherspoon's in there on a 30-year lease. We've got the Co-op Food in there on a 15-year lease. Costa Coffee on a 15-year lease. This is a national kind of games operator in a 15-year lease. And what you can't see here, there's a little promenade here, but there's a beach next to it. And the beach, we have a government quango in for 35 years without any breaks, which is quite cool, quite nice. So we love to do both, shops and uppers for residential components upstairs and asset management downstairs, or wholesale of shops and uppers into the component parts and selling off each part, or businesses that own their own commercial property, usually businesses in decline, to be honest, where the commercial property as an alternative use is worth far much more money and far much more impact in the local economy than what it's currently being used for. So they're the two things we're after. And, and if you want to stop the rot of inflation, start to grow your capital and learn how to protect your assets, and you can, like this guy here, you just haven't got the time to do it, perhaps, we're worth a look, because, we're pretty simple. We like to buy, we collect the rent, you get paid. It's pretty straightforward. That's us. We've put it, Paul asked us to put something together, so we put a little short video on that link. You just take your phone, get the camera out, and it'll come up in your Safari or Chrome browser, and you see a short video there on the impact of inflation on your capital. If you're sitting on £1 million or 100,000, whatever it is, £1 million erodes in the current rate of inflation down to 520,000 in 9 years, which is quite incredible. Watch the video. I think it's quite insightful. So that's our KPIs, what we're looking for, how we do things, and we're looking for more deals in a nutshell.
That's really interesting, actually. It's really kind of interesting to look at the sort of the various things that you guys are looking for, and how you've been so kind of laser focused on all of those kind of key things, are sort of sitting there looking at your requirements list and thinking, well, so why is that and why is that? And then sort of they all kind of come together, don't they, sort of to complete the picture at the end of the story almost, which is kind of really interesting, where every little bit of it is kind of aimed at just pushing, just to bring forward the best returns, really. So really exciting. So I suppose the next bit of the session really is to look at kind of how we can find some sites with Nimbus, and then sort of talk about how we might assess those, check their works, make sure that when it comes to the point of running that analysis, making sure these schemes stack up. So thinking about things from a planning point of view, but also from a financial viability point of view as well. And then what I wanted to do just after that was then start touching on some of those approaches to owners, perhaps what the letter might look like, well, kind of perhaps just thoughts and tips around all of that, and sort of perhaps some other ways in which we can get in touch with people, and kind of what does that phone call look like as well. If I go and ring up the owner of a particular property that I like the look of, then how do I make sure I get in touch with the right person? How do I make sure that how do I know what to say to that person to get through the gatekeeper, to get through the receptionist, if you like. What I want to do is just to bring up my copy of Nimbus here. What I'd like to do is to jump into the chat and just get people to just pop some locations into the chat in terms of places I should go and search. And if you kind of keep it within an hour of London, that'd be really useful. Somewhere in the southeast, if people have got kind of particular locations. Donald's put Ken, Alan's put Woking. I'll go for Woking because Woking is actually a town in effect. So let's just jump into that. So Woking, Horsham, Ashford, places like that. Dan, all of those kind of places you're okay with, are you?
Yes, absolutely. Sounds perfect.
Fabulous. Well, let's jump into Woking just to start with. So just kind of for those who haven't seen Nimbus before, what we're doing here. So that's at the top here is like a little Google powered search in effect. So I can type a location in there, Nimbus goes off, finds the center of that location and plots it in the map. And then it plots a little 250 meter radius around that. And what it's showing me here is freehold properties edged in red. So it's all properties registered with a land registry. So it's information that comes from there. We've then got leases that are shown, and all this stuff then is clickable. So I can go and sort of find information about each of those. Before I start with that, so each of these things I can kind of click and information kind of pops out and it'll kind of show me information about that. But before I do that, I want to sort of take a slightly different approach on this, because one of the things that Dan started with saying, and kind of watching what Dan was talking about, it sort of appears to be ideally residential as an exit, but actually it sort of feels like he might consider a student scheme, he might consider perhaps a bit of an HMO scheme. If that kind of stacked up, it might be something that he kind of consider it. It sort of feels like it generates some uplift, kind of recycle my cash, that sort of approach. It sort of feels like he's doing. First off, we want to make sure that actually we're in the right ballpark in terms of those values. We want to be £400 a foot or more. So Nimbus has a little section called the overlays, and in that there's a little market section. And what that will do is allow me to plot on the map, firstly, the sort of neighborhood boundaries, if you like. So it's plotting little areas here, which are neighborhoods across this area. And it's then telling me what the sales prices of residential properties are divided by the size of them in effect, and all averaged out across that area. What this is giving me like a little heat map to say, well, actually, North Woking up here is a better part of town than Central Woking. And actually you can sort of see sort of 430 here and 420 here, but 510 in the north. As we come out southwest, there's sort of £480 a foot, and then sort of those values sort of disappear off by sort of 10% as we sort of come out further west in effect. So I have a little bit of an understanding now about what Woking looks like, where the really kind of good parts of Woking are and where the weaker parts are. Perhaps it's interesting to know that McLaren have an automotive centre just in that kind of good part of town, which is, I suppose you kind of expect that from them, really, wouldn't you? But it's kind of showing me across this area as well how Woking sits relative to Esher and further out west, where we sort of get into Frimley and places like that, and how those values sort of drop off. And actually, kind of over here, we're sort of almost at half the price we are of kind of North Woking in effect. So give me that kind of little understanding of, well, where should I be searching? If Dan wants to be more than £400 a foot, then these are the areas that I should be searching in, sort of around Woking. So we got lucky with the recommendation in the system. So in the from, I think it was Alan, I think, that said that we should search in Woking. Second thing is, well, are there any HMOs in Woking? There are a few actually, and actually it's some of those, perhaps those kind of weaker parts of Central Woking. Actually, there are some really quite a lot of HMOs actually. So actually, we could be considering that perhaps for Dan as perhaps a secondary exit. So if he's not quite so sure about the particular type of property, talking about bed sits and this sort of stuff, could we persuade him down a stage further and say, well, actually, could we do some sort of shared living and this sort of stuff in Central Woking? And of course, what we should also have on here somewhere is a train station. So there's the train station there. So we're sort of looking in that sort of 10-minute walk of that sort of central part of town in effect. So if we then sort of start to look at some of those strategies in effect that perhaps we could apply where we're looking for shops with uppers, or we're looking for sort of those big office blocks that he's been looking at and converting those into residential. There's a couple of strategies that really kind of spring to mind. And I guess what we want to be doing, if we're bringing something forward to Taylor Capital, is saying, well, actually, there's a base case that perhaps relies on a bit of PD. And then there's an upside that perhaps we kind of look at the building in more detail, perhaps we can get a story on top, we can extend into the car park or something like that, that might kind of drive additional value off the back of it. But the base case works, and that base case then should allow us to bid a little bit more than the site's worth, maybe to get the thing off market, or indeed if it's been on the market, then hopefully we can try and acquire it after a little bit of a long time on the market at some knockdown prices. So what I want to do is drop into the strategy. So these form part of our Elite Plus system, and in effect, you can have a group of strategies, sort of typically 4 or 5 in a little bundle, and you subscribe to one of those as part of an upgrade from the Elite platform. In effect, what I want to show today is firstly the Class MA strategy. So what this does here is it looks at the area we're looking at. So we know we want to be within a sort of a sensible distance of Woking train station, in effect. And we don't want to be above £400 a foot, so we know we're already at that sort of level. Then we want something that's going to be hopefully quite big, because Dan's got some quite high values that he wants to go and achieve, in effect. He wants kind of 3 stories and things. So actually, what we start to look at is things like this, where in effect, what I've done is I've looked at, in fact, got pretty lucky here, and I'm 300 square feet off your 15,000 square foot minimum. So maybe I haven't quite got you a deal here, but I'm going to go with it. I'm guessing you might take 14,747 square feet rather than it being a hard 15,000 square foot minimum. But
absolutely, especially you can potentially put another floor on that one, depending on when it was built.
Absolutely, yes. We'll see if we can. So in essence, what I've done is I've done some pretty clever stuff in terms of I've clicked 2 buttons and that's about the extent of the cleverness that I've done. But in effect, what this has done is it's gone off and it said, well, where do we see on a site a Class E use? Because Class MA applies to Class E. It then says, so Class MA then only applies up to 1,500 square meters. So it's saying, well, what are the properties that are less than that size in order for the Class MA to apply? And we're then going to have to extend this to get down to his 15,000 square foot minimum, in effect. But we've picked the big one, which means we've got kind of plenty of kind of scope to do that, I suppose. Then the information panel on the right pops out when I start looking at that strategy, in effect. And it's saying over here we've got 14,500 square feet or 14,750 square feet on a Class E office. The sales prices in this part of town for a new build is about £520 a foot, and actually it might be slightly higher than that now, because Dan's sort of saying that in Guildford around the corner he's actually getting sort of 565, so it may be even slightly higher than that now. But it's sort of putting a conservative appraisal through. It's saying if we converted that for £115 a foot, which is about 2/3 of new build cost, and if we paid a market rent for that and a 6% yield, so sort of £17.50 a foot and a 6% net, it's saying that you'd be paying sort of £275 a foot for that office space. Now, if we did all that, we'd pay about £4 million for it. We'd convert about 1.7, and it'd be worth about 7.5 once that's done, which is actually nearly £2 million worth of profit out of it. That's about a 33% return off the back of that, in effect. Just give me a very quick way of understanding, actually, that would appear to be interesting. What we may then find, if we're lucky, is that we might find there's a bit of extra airspace across that building as well. So this is the building that's brought back over here. Well, actually, there is perhaps a little bit of scope for that, because the building next door has got a bit of extra height next door like that. And actually, there's some bigger stuff over there as well, isn't there? And actually, maybe some space. Yeah, I would have thought there's probably scope to do something across that, and you've got a big lump behind it as well. So I'm kind of thinking you might have a bit of a chance of doing something on top of that, mightn't you?
Yeah, I think you definitely could get lucky on that one.
Absolutely. And so I suppose what that's then kind of giving me is perhaps a site I'm kind of interested in. So let's just have a little bit more of understanding about that particular property that I'm now interested in. So what I can do then is I can click on the title number, and that brings us out something rather more detailed. So this gives us the full information panel regarding this property. There's the address of the property. It's owned by Prime Place, Woking Goldsworth Road North LLP. I mean, that's got a snappy title for a company, in effect. They bought that in December 2016. It's on just over 1/3 of an acre. Some building footprint information, commercial sizes, rates per square foot, and this sort of stuff. There's a planning history for the property as well. I can go and look at and see what are all the planning applications that have have gone in on the site. I can see it's not listed, doesn't flood. So there's your planning application. In fact, I had a scoping opinion for the redevelopment of the site actually, which be interesting. We're going to look and see what that says in a second. Actually, you can see the property's not listed, not in the flood zone, not in Greenbelt or AOMB either. So we now know the sort of what those kind of headline issues might be around the property itself. So something else that perhaps would be interesting is to sort of start to look at the building itself and start to say, well, actually, let's go and firstly write a letter to that owner. So first off, I'm going to add this site to a little thing called workflow. Now, what we're going to do is we're going to try and get in touch with this particular company in effect. So the first thing I want to do is I want to write them a letter. So I'm going to save that property into a thing called workflow. This is like a little Kanban board that we have over on the left-hand side over here, which in effect allows me to manage those sites and make sure I know which ones I want to go and write letters to. So I've saved my property to this webinar opportunities section here. I can then download all the other properties that I've sort of looked at and I've either kind of wanted to send letters to or rejected or whatever it might be. I can then download all this into Excel and it'll bring through those owners' details and their address details through into that Excel document for me as well. So I can then do a very quick mail campaign out to all of these owners. Once I've done that, I can move all of these properties into another stage and I can set all these different stages up. So I can then say, well, actually, I want to go and write to the owners. If they don't come back to me, I'm going to write to all these owners in 6 weeks' time. And in 6 weeks' time from today, I might not do it then because that's just a week before Christmas, but I might do that kind of first or second week of January or something like that, once everyone's back to work properly after the Christmas break, in effect. So I can then set that up and have a little note on the top here to say, right, send a letter to this list of properties, a list of owners of these properties in perhaps early January or something like that. Then when it comes to early January, just go back and do another little download and send the letters out again to make sure that I'm sort of pulling everything out. If somebody comes back to me out of that list on my first list of letters that I send out, obviously I'll move it out of that stage and put it into a separate one where I've got perhaps a separate section saying responses received or something like that. So firstly, I can do that quite quickly. The second thing I can do is actually I can start to say, well, actually, could I go and find this company elsewhere? So if I click on this little number here, this is going to take me through to Company's House. So Company's House then tell me who these people are and what they do in effect. So this is actually showing it's a limited liability company, had a previous name of Prime Place Woking number 2 LLP, again, snappy little name. There's a filing history here, which is going to show me a set of accounts. So I can perhaps start to dig into those accounts and start to understand kind of who they are and perhaps what they've got their buildings valued at. So they've got a revenue there of just 30 odd grand, which doesn't seem very much actually, does it, for such a big old lump. They've got 5.6 million quid's worth of stock, which I suspect they're trying to redevelop this themselves. Maybe, I don't know. Seems to have taken a long time if they are. And they've got sort of 5.6 million quid in for the value of that. One of the tricks to this then is saying, well, actually, the directors of this company, which in fact, I've probably to kind of chase this through actually. So in essence, what this is showing me is that the members of this LLP are BE Eco World Nominee Limited and Eco World London Holdings Limited. And so actually what I might do is go chase that through to go and see if I can get through to another set of directors. So there's kind of a whole bunch of other companies. We sort of got ourselves into a rabbit hole in terms of the company structure and this sort of stuff. So I might do a little sort of sneak around with this. But in effect, what I was looking for is the name of somebody in one of those companies. I can then go and Google that company, ring them up, and then say, the question is, well, what's the pitch to that person when we go and do that? I'll perhaps come back to that in a moment if that's okay. So this gives me then an understanding of the property. I know that property is kind of on profile. It's had a bit of financial assessment done on it. By definition, through the strategies that we have within the Elite Plus bundles, it's done some planning analysis on that as well to say that it's not listed as a flood. It sort of sits within those Class MA opportunities. So then what we can do for Dan is he can go and get his Class MA PD rights implemented and perhaps go back in with a full application to put more space on top and perhaps even extend a little bit out the back. It's sort of subject to kind of what that scheme might look like in effect. But it's giving him confidence that actually we're going to drive value into the site off a base case, which is take the existing building and convert that to resi. And then of course then perhaps putting extra space on top of that property as well. So having got all of that sorted out, I suppose then it's going to start moving into things like the financial assessment around all of this. There's a couple of bits that would perhaps be interesting is when we're then starting to put this forward as an opportunity, we're going to want to understand the residential values in more detail. The first thing we're going to want to do is going to want to search in a particular location and say, well, what are all the residential properties that are sold in that location in effect? The way I do that is I go into little search, I go to the filter section up here, run a set of comparables, click apply, and then Nimbus just shows all the properties then within that location that have sold within the last couple of years, is what I've said. What we can see is there's sort of a few leases that have been granted. These would be kind of long leases on flats that have been sold, and one little freehold that's sold there. So that's not particularly exciting. Let's just kind of give that a slightly bigger raise. And in fact, I don't want to go any further back in time, actually, because I'm kind of conscious that I don't want to kind of use too historic stuff, especially given COVID and this sort of stuff. This is going to give me that list of all those properties. So we can then start to see there's a few little properties around here that have sold. We can go and click on those and go into the details of those properties, see kind of what they sold for down here. So this is that particular property. You can see sort of it was 797 square feet or so. It sold 436,000 back in April 2020, and that was sort of £550 a foot in effect. But we can also then put that into Excel. So when we then start to build that schedule of what are the true sales prices across this area, what we really want is we want to go and see a set of particulars for a particular property. We want to go and see the details of all the properties that have sold in that area, and then really understand exactly what they look like. And so this is a list of all of those properties. So we then have the sort of title number, the address of the property here, the price that it's sold for, the size of it, and then how that broke back as a rate per square foot. For me, that sort of early fag packet, kind of the early assessment of that, usually is where you sort of find the top three that are kind of clustered together within about 10% of each other. Some of these look quite high, sort of a 387 square foot flat, hitting 750 a foot. So it seems pretty punchy, but there is then a link on the far right into Rhyme to go see that property when it's sold. That kind of could be helpful just to really kind of understand exactly what those sales prices are, what a flat sell for, what a houses sell for, what are those rates that apply to that, what do they look like in terms of those comparables. On the far right over here, we have then that link through to Rightmove to go and show us what 66 Vale Farm Road looked like. So we can really see is it a true comparable for the kind of stuff we're going to be building when we go forward with the scheme itself. So hopefully that's useful. I suppose one of the interesting things with this is that in the middle here, we can see that actually there are one or two properties. In fact, there's one property actually here which is sold for 1.1 million. And actually, that was an HMO when it sold. So the license was issued for the HMO itself on the 16th of July 2019, and then sold on the 6th of January 2020. So in essence, it was sold as an HMO. And sold for 1.1 million. Again, 1.1 million. Again, we can go off and find the details of that using the Rightmove link on the far right-hand side. So we start to get a pretty clear understanding around what the true sales prices are, and we can demonstrate those through the facts around what is actually sold nearby, and how that then affects the gross value of the appraisal going forward. But the other thing we also can do with this is we can use a little extra bit of functionality. Well, in fact, it's two bits I want to kind of just have a play with actually. The first bit is the commercial availability. So I'm just going to clear that search. I'm not showing you two things at the same time. What this commercial availability is showing me is it's showing me various properties that are on the market with one of the top 400 surveying firms. And this is going to be kind of interesting because it's firstly going to allow me to see, well, which local agents kind of truly understand that marketplace. If I want to get a valuation done as part of the finance package we're going to put in place when we go and buy this building, then these are the people that I can go to go and ask for some local advice to me how that marketplace is doing. And equally, what might also be interesting is some of the quoting prices that they're putting on those particulars. So there's one here on the market with LSH, which is to let, so 2,500 feet to 80,000 feet. I'm guessing it's kind of grade A office space. It looks pretty smart actually. But within this is going to give me some quoting prices. I mean, this is pretty smart stuff. So it's probably not quite the best comparable, but it is very, very close to the property we're looking at. So it's giving us a kind of a quick understanding of some of this, but it may well be there's some other stuff. So Savills have got something else just a bit across town there at £28.50 a foot. My guess is that's probably some reasonable space as well. Actually, it's quite a small building that. So it's only 800 square feet. It's 8,500 actually. 8,500 square feet. That. Kind of worth looking at the brochure there just to kind of see the quality of that space. So what I'm trying to get to here is to really understand the value of the building we're looking at and kind of what that marketplace might look like if we was just to put that back on the market, or perhaps even rather than perhaps Dan doing the conversion from office to resi, whether in fact there's a simple, give it a lick of paint, it's worth £17.50 at the moment, and it could be worth £28.50 if we give it that lick of paint and that kind of put the raised floors in and this sort of stuff. And can we do just an office refurb on it and drive a higher value off the back of that? Maybe there's a marketplace for that too, which is kind of what this is sort of drawing me to. It sort of feels like there's an uplift in the value of that building by doing a simple office refurb scheme in effect. I suppose what should be kind of interesting then as well is if we look at this is the planning overlay. So what this does is this shows us it shows us planning applications across the area we're looking at. So of course we're looking at, this is the building we're looking at. It's got my little pin on it, which I just put on it a second ago when I put it into the workflow. And what it's showing me is all these kind of spots. So what do these spots mean? Well, these spots mean that the spot being there means the planning application there. Where they're blue, the planning application talks about commercial uses. Where it's red, it talks about residential uses. Where it's both, it's talking about either a mixed-use scheme being proposed or indeed a conversion. And then the more faded out it is, the older it is, and the bigger it is, the bigger the application. And what's just kind of making me sort of interested around here is actually there's quite a lot of applications that have these sort of blue spots with a red outline, which means there's either a change of use going on here or there's a mixed-use scheme coming forward. And so actually what we're finding is exactly what I expected. So what I can see there is a prior notification for change of use of office B1A to 31 dwellings, 10 one-bedroom flats and 3 two-bedroom flats, and 18 studios, which got approved just 18 months ago, or in fact 2 years ago now. So what's kind of interesting is that if I'm putting forward to Dan to say, I want to go and buy this building, this office building here, and convert it into resi, and here's why you should do it, because Class MA applies to it, well, actually, there's a planning application just here where it's already happened 5 doors down the road, in effect. And that then could be interesting for a number of reasons. Firstly, this thing that I'm trying to suggest to you, Dan, you should go and buy because it's a good deal, thanks very much. Well, firstly, one's happened around the corner, and therefore somebody else thinks that's a good deal too. So I'm not barking up the wrong tree. This is clearly a thing that I can demonstrate. What might also be useful as part of this is that if we go and look at perhaps a set of plans that have been proposed, if we look at, say, perhaps the proposed ground and second floor plans, for example, what we'll find actually there's a set of architects that might also be kind of quite useful to engage with. So if we're looking for who is the right design team to go and work with, well, actually, Planning Studio 4 Architects Limited, probably not a bad shout, actually, because they've just gone and got a consent around the corner for something very similar to the one we're talking about. So actually, probably not a bad shout in terms of those companies to support you, in effect. So some really kind of interesting things around how we can sort of build that case around the particular property itself, knowing full well some of the challenges that might sit with that, tapping into those really great sort of local consultants that really kind of know the planners, really know the consultees, and can really kind of negotiate their way through that. Can be really, really useful, hopefully. Fabulous. There's a ton of other stuff that I could show you, but I kind of feel like I might talk for a while. I suppose before I sort of move on, what I wanted to do was just to kind of talk through that pitch. So when we've found a site and we're sort of saying, well, let's go right to those owners, the kind of the key thing for me is that letter that you send is to keep it very light, keep it very short, very light, very personal, and kind of make it real, if you like. Don't forget the follow-up, which is what we were saying a moment ago. So send them a letter again. If they don't reply, send them a letter again in sort of 6 weeks' time or so, and make sure that your kind of letters at the top of their list. And of course, I'd make sure that I kept that on a cycle as well. I'd send another one. I sort of have a few letters now, and I'd make sure that I tap back in again in 6 months or so's time. What can be interesting is that you can tap into those owners through their agents. There's actually a little bit of functionality on Nimbus we show you where we can go and plot a full estate and bring through the details of any agents that company is instructing elsewhere. So if you can ring them, you've got an agent to help broker that deal and help push it for you. But equally, if you Google that company and ring through to speak to one of the directors and ask to speak to a director, what you'll tend to find is that the person answering the phone at reception will say, before they say, yes, I'll put you through, say, well, they know what it's regarding. And of course, the answer to that is no, they won't. It's a new matter, but it's regarding And if you quote the property that that company owns to that person, they will then put you through to the person that's the director that's that business. If I ring up Taylor Capital and I've asked to speak to Dan Taylor, and the receptionist says, will he know what it's regarding? And I say, no, but it's regarding the property in Guildford. And I quote the address of the property in Guildford that he owns. He will answer my call because he won't know if the thing's burnt down or if there's a problem or if I want to go let it off or buy it off, or whatever it might be. And so he'll typically will answer that phone call. A little tip to get yourself through the gatekeeper. And I think the same is kind of true. This is just a very simple letter template that I've used elsewhere that typically we find gets about a 10% response rate. And it's sort of, there's two side by side. And the reason for them being side by side is that, firstly, the way that I would write to the owners of a property, if it's Mr. and Mrs. that own something, then I would write to them in this way, where I just kind of, I'd write to them personally. I wouldn't necessarily say Mr. and Mrs. Smith. You could put Mr. and Mrs. Smith there. Don't mind. It doesn't really matter hugely. But I'd reference the property they're talking about. I keep it very short. Apologies for this approach. I mean, researching your area for a suitable property and having done some research. And the having done some research bit is important because it means that I'm real. I've done some research about your property. I feel it's very likely to be of interest to us. If any plans to dispose of all or part, then I'd be delighted to hear from you. We're actively searching for an next opportunity and currently prepared to pay in excess of market value for the right property. And the reason I'm saying that is that what I'm expecting to do is for them to be excited by the fact I can pay in excess of market value and to come back and talk to me. And what I'm then expected to do is to have to explain to them what the current market value is. And I'm going to use the commercial comps, I'm going to use the commercial availability in Nimbus to kind of explain what that value is. And then I'm expecting to add value to it by applying something like Class MA to it. And I'm expecting them to say, well, I want a longer completion. I want to have a delayed completion off the back of this. And the reason why you would sell it to me on a delayed completion is because I'm going to share some uplift that I'm going to create off the application of Class MA to this building, and I'll share some of that with you. So we've got a base price plus a bit of an uplift that you're going to get the benefit of, provided you enter into a sort of a longer term process with me in effect, which is only probably 12 months, maybe something like that, where I'm going to get the planning consent, a bit of time to perhaps resubmit or something like that. So kind of 12, 18 months absolute backstop I would expect, which may well give me a chance to get an appeal through, question mark, maybe, sometimes, maybe we'll see. And in effect, that's then kind of why I'm doing that. The second letter then is just a slight tweak. If I was writing to a bigger company like JD Wetherspoons or someone like that, I would label it this way. And the reason I would label it this way is that I'm trying to make that letter look like a letter from the bank or look like the letter from the VAT office, something like that. And the reason for that is that if I mark it the director's private and confidential, it will get through that gatekeeper again. They'll be told not to open up those kind of letters. It'll end up on the desk of the MD or the CEO or someone like that, who will then open that letter and then pass it to the person that is in charge of the property portfolio. That means I don't end up writing to the wrong director who's not in charge of the property portfolio when it go in the bin. It goes to the person that then passes it to the owner of that property, sorry, the person that runs that property portfolio, who then will in effect have had it passed them by the CEO and then will typically reply to you. All the same wording. It's just purely that little trick at the top to make sure that you tap into the right and get the right response rates. Typically for me, these letters should get you about a 10% response rate. Typically, of the responses you get for that 10%, so if you send 100 letters out, we'll get 10 responses back. I'd expect 5 people to be saying, no, I'm not interested at the moment. And I expect 5, so the other half of those responses to be, if you come back saying, oh, that's kind of interesting time you wrote to me, actually. What were you thinking? And let's have a conversation about that. I just need to close sort of 1 in those 5, and to be, I've got a site there, basically. So that's really the process. Nimbus obviously can support you with that. If you'd like to have a go at that yourself, or you'd like to see it in action in your local area, have a go with it, then all you need to do is book a call back with us. I'll pop the bit.ly link in the chat in a moment for you. You book a call with us, we'll give you a little demonstration of it in your area, show you how to use the system, and then give you a little bit of time to go and have a play with it yourself and see if you like that. The Elite Plus system has some strategies and some bundles of strategies that in effect will aim at the commercial conversions for you, so you can have a particular set of strategies. That's the one I use, the Class MA, as part of that commercial conversions bundle. We have residential land and airspace, so if you're just looking purely to do residential developments, there's a bunch of strategies you can apply there. And then, of course, HMOs as well, if you're interested in those. So what I'm going to do is I'm just going to jump back into my slides for a moment, just pull out that link for you, so you can go, and if you want to have a call back with the team, I'm going to pop that into chat for you now. Just give me one moment while I do that. So if anyone would like to arrange a call back with the team, there's a link there to get yourself set up on a demonstration, and then obviously a trial afterwards. And then Dan, in terms of if people kind of want to get in touch with you, or kind of how can they do that?
Yes, absolutely. What you could do is if you just scan that, take your phone out, open the camera, and if you obviously hold the camera over that QR code, then what you'll get is a free video all about how inflation is really rotting, stealing your money in your sleep effectively, and what you can potentially do to stop that, reverse that, and grow your capital instead of it being eroding. And then after that, if you want to hear more, you can book a call to have a chat with us to see if potentially the club's right for you. And if it is, great. And if it's not, we'll maybe put you onto somebody else. Because really, we work with business owners and professionals with no time that want to grow their capital, but along the way that they want to learn about the commercial strategies. They want to learn about, how can you add value? What's the 6 different ways we use to add value? What tax strategies can really increase performance, and what kind of asset protection strategies can you use to help, number one, grow your capital faster by retaining more, and then if you like all that and you want to get introduced to some professionals who we use, and we've kicked the tires with them for decades, and we've got some real incredible people around the table. We introduce you to our professional team as well if you're in the club. So it's not for everyone, but watch the video. If you want to have a chat, then there's a link to book a call, and we'll jump on the phone.
So
cool.
Next thing, I suppose, really, is just kind of any questions. So what I'd like to do is, if anyone would like to ask a question of us, and there's kind of Daryl's got his hand up at the moment. What I was going to suggest we do is, if you could open up the control panel on your Zoom settings and just raise your hand. There's a little raise hand button. If you click that for me, then that will alert us up here that you want to ask a question. We'll then just ask you to unmute yourself, and we can and answer your question for you there. So we've got a few people that are raising their hands at the moment. Let me start. So Michael popped his hand up first. Let me just stop sharing. Let's invite Michael up. Let me see if we can get you to.
Hello.
Hi, Michael. How are you doing?
Can you hear me? I'm fine.
Yes, absolutely.
Thank you very much for the presentation. Very interesting.
Sure.
I just you mentioned earlier on regarding the airspace. Dan mentioned that you can develop it on top of the airspace, but given that the property is already there, the foundation is fixed, how can the extend it 2 or 3 more floor?
I've seen your question.
Supporting,
structural integrity, basically,
Exactly.
And that's one of the key considerations. That's why we always have a base case, i.e. worst case situation, that we can guarantee to deliver. And then the second case is, okay, if we achieve planning is one thing. You'd have to, obviously, another thing is structural, capacity, structural flex. But another thing on top of that as well, can you actually get access to do whatever you need to do to bolster the building, to embrace rigidity and also that strength. And that's one of the things that in the Norwich House one in Guildford, and we've got two situations there. Number one, we've got a base case sorted, but the best case, if we can put another 2 floors on here, fantastic. But we have a structural situation and the way to fix that is by going into one of the tenants' unit and putting some extra bracing in there for the flex. Now that can be done, but if they had a 10-year lease in there, it can't be done. But the fact that we knew that we can gain access to that is more likely that we'll get the extra 2 floors. So yes, you have to always have professional team around you, structural engineers, M&E, and all. We've got 16 on this project. You have to take all those component parts and add it up, and then thinking, okay, what if? But you also have to remember as well, can you get access? Can you get, can you take that unit back? And one of the units in is Poundland. They've got 5.5 years, so we can't get access to that. Yeah, so we can't actually build anything in bracing on their unit. So we have to then think, okay, CX, they've got 7 months left. Yes, we can get access to that. We can serve with Section 25. and crack another deal with them for a new lease. But in the meantime, we can take that unit back, put the structural integrity that's required to build those further 2 floors, and then actually strip the place out and give them a better shop, give them a better experience in there. And we've been talking with them recently, and they love what we're doing. And what's wonderful about this, it doesn't happen every time. We've got access to take the unit back while we do the work, and they want a new 10-year lease. So it's kind of happy days. And Poundland, on the other hand, they want to relinquish the first floor. So that relinquishing the first floor, they've got some warehouse space upstairs on the first floor. If we get that back, we get another 5 units. So it's then working out the capital cost, or the profit from an additional 5 units upstairs versus the loss of rent from the upper first floor, which would be about 30k. Now, 30k doesn't sound a lot, but having a Poundland on the lease, that's worth £500,000. So are we going to make more than £500,000 taking the first floor back? So you've got all these different moving parts going on, but it was a great question because it's definitely one of the biggest things that you have to think about early on, and part of your team that you have to get around the table to assess these things. The feasibility is obviously the structural capacity. What can you do? What's possible? And if you don't know about what's possible, your offer has to be based on your worst case situation.
Yeah, that's very interesting. Thank you. Just to complete it, what sort of additional cost at percentage wise if you do the bracing to support the upper? How much would that be in terms of percentage to the overall capital?
That's how long is a piece of string. Every deal's different, and anyone that answered that there would be a million caveats that would make the answer worthless anyway. But it's all deal dependent. What do you need to do? What's the integrity that's already there? What are you trying to achieve? What what parameters we do have? What my partner's a mechanical engineer, so he knows where the structural engineer, where he's still got flex and quite a bit of flex. And some structural engineers are more positive than the others. Some are a little bit more conservative, but because he's an engineer, he knows exactly where they can go and they cannot go. And that's a wonderful thing to have on the team. Somebody with that kind of technical skill set. So that really adds a lot to the table when we analyze deals, because he already knows what we can and can't do, kind of thing. But there's no straight answer to that. It does add costs. As I said before, since January, steel's gone up 89%, which is quite incredible. That adds to cost because with the steel bracing in this, the steel construction on the top floor. So, and to really assess the costs, you need your engineer, you need your architects, and you need a QS. Without a QS, you just, you're making assumptions. You need a QS on your team, fundamental. Just like you have an accountant. A QS is basically every month he gives us an update on our project costs for our base case and our hope case. It's updated every month.
Thank you.
You get that QS to run a couple of cost plans for you. So one based on what the conversion looks like, two based on with the extra airspace. They're armed with or furnished with a spec from the engineer to say we're going to do this, this, and this, and this is where we're going to do it. The proposal and the solution that's put forward by the engineer is going to be this is what you can actually get access to and when they're going to do it. So you can't touch the Poundland thing, but you can use the other part of the building and this sort of stuff. And so you're kind of juggling those things along, getting the cost all the time, and then working out what costings you need in order to work out what decisions you need to make, and then what costings you need, what designs you need to make sure you get the costings right, and then appraise them at the end to make sure it all kind of stacks up. So hopefully that makes sense.
Yeah,
unfortunately, it's not a nice, easy 25%.
Sound like there's a lot of series of problem solving that one after another. You have to meet them all before you can get to the bottom line, in a way.
Yeah, it's a lot of moving parts in these kind of transactions, to be honest, and it's not as easy as it may look. There's constant monitoring. You have to have the ability to lead a team, both in the high level approach and also in the technical detail, and it has to be something you love, because there's a lot of moving parts and the wheels fall off the cart. This is real life.
be confident enough to go and challenge them as well. Actually, that's something that took me a little while to kind of learn. Is that, oh, I'm sat in a room with an architect, therefore they must have thought it through. And I realised they hadn't, and actually sort of challenging them on stuff meant that actually we got better schemes off the back of it. And me, I used to carry around a little red pen in my pocket and sort of I'd get their stuff, and it's like, because actually I realised that you could actually add value to that through the design process, and they were kind of practicing about other stuff or whatever it is, and whatever reason there is for that. But yeah, so certainly. Does that answer the question, Michael? Is that all good?
That's lovely. Thank you very much. You've answered the question, but I still have not got to the bottom of the number. So, but that is, as you say, you need a whole team together to get to the bottom line. So that's great.
You need a concept. You need to make that, is that concept feasible from a structural point of view? Then bring the QS in to see what really is the cost plan, instead of just throwing £150 a foot at it, or £200 a foot. And then that needs to be monitored across the lifetime of the deal, to be honest. While we've got this asset price inflation, that's an interesting, continually moving feast. So in terms of if you want that, you've got to get your own team around you, and start to pan that out. And it's different in every location as you go. Scotland to the south coast, prices vary, and access to supply chain has been a massive issue. So that affects pricing, and a ton of things affect pricing. Like, for example, in this one on Monday, we've got the strip out team doing enabling works on Monday. Why are we doing that? Why are we spending that kind of money if we're not ready with D&B contractors yet? It's because if we strip out everything, then obviously we're defending against business rates. There's no business rates in that respect. But number two, it's a hedge. It's a de-risk strategy for the main contractor, who now has everything exposed. They know exactly what they've got, and they can price it accordingly, instead of putting, variation heaven coming forward. We can nail that down. So it makes things a lot less risky and less movable. Yeah. And
often you can implement your PD rights as well as part of it. So I can get my consent on my Class MA, do the strip out, which means I've got the plane ticket ad infinitum, and then I go back in for the airspace afterwards. So you kind of, I wasn't sure if you're going to say that, Dan, but kind of that's sometimes kind of useful, just to kind of to bag that consent, implement it. We're now on site with it. We've got our PD, and now we'd like a bit more, please.
You just mentioned something that I just raised a question. You say that if you strip out the entire property, then you avoid paying a business rate. But that's only from council to council. They vary, are they, or are they all the same? If you strip it out, and it's because sometimes they only give you 3 month grace, and then after that you pay the full business rate again.
Well, as soon as you strip out, you've started the development. You've got your consent, you bagged it, as Paul rightly says. But there's a very kind of famous case called the Monk case. It came down in favour of the developers in terms of this, what's under development and why you should be zero rates. And sometimes you have to defend against local authorities. Sometimes local authorities are fantastic, actually, and really help out. And sometimes other ones are a little bit different. But the thing is, sometimes you have to defend yourself. So you have to know about these things. About the Monk case, you have to then force yourself on the finance department of the local authority, because there's two different departments. There's a rates department, and then there's then the finance department, and it's those chaps that actually reset it back down to £1 effectively. So you got to fight your corner, and you got to know where your rights are, and there's no free lunch.
Thank you. That's brilliant.
And we've got Pierre wants to ask a question as well. Let's see if we can get Pierre up.
Hi guys, can you hear me?
Yeah, we can. Yeah, how you doing?
Yeah, great. Great session today. Thank you, guys. Dan, are you only open to business with people who are part of the club, or?
Yes, that's one of the benefits of being in the club, Pierre. As one of the things that we help our club members with is, we want to grow their capital. We want them to learn about the commercial strategies if they've got the time, get a front row seat. We do 2 calls a month, and and we help them grow their capital by then getting involved in the deals on a fixed return. That's going to open up next year into equity as well. We're going to create partners. It's another development and compliance sprint on our platform. But that's a story for another day, I suppose.
Yeah.
But in terms of the virtual deal sourcing, it's just for our club members or our kind of handful of agents that we know personally, kind of thing.
Okay, perfect. Thank you.
Cool.
Yes. We do have one further question, I suspect from Daryl. I'm not quite sure. Let's just see if Daryl wants to ask a question. He may not, but let's just see if we can ask him to unmute himself. He had his hand up before we asked for questions, so I don't know if he actually wants to ask a question or not, but doesn't appear that he does. So I think we're all good for that. Alfred's got a question in the chat. Dan, do you cover Leeds? I think you don't, do you? You kind of want to be within an hour of London, don't you?
Well, for shops and uppers, where there's residential component, it's pretty much an hour of London. But for, you know, other, like, yes, we look at Leeds for businesses. You know, remember the acquisitions of ABC, acquisition of businesses with commercial properties. If it's next to Leeds University, then, you know, could be another purpose-built PBSA, which is purpose-built student accommodation, which you know, we love as well. So we look at properties that are in decline and think, what's the demand in that location? What's the alternative use that is, you know, thriving right now? But if it's shops and uppers, it's an hour of London.
Right, well, I think we've covered all the questions actually. So I think all that remains to me to do is to firstly thank you, Dan, for your time today. Very interesting chat and presentation. Thank you so much for sort of sharing with us your the way you've set your requirements out and the requirement you've got. So best of luck with that, and I hope your trip home tomorrow gets you a successful conclusion at the end of the week as well. Fingers crossed for you.
Yes, thank you very much. It's always a pleasure coming on the you know, your webinars. I love what you do. Love your platform, Nimbus. It's a great tool, and you know, looking forward to some more. Thank you very much. Cheers.
And then just finally, thank you to all for watching. Hope it's been useful today. We've certainly enjoyed ourselves. I've been Paul Davis. We've been Nimbus Maps. We'll look forward to seeing you again soon. All the best. Bye for now.